This is a Brooklyn-bound 2 train. The next stop is
Wall Street.
Stand clear of the closing doors, please.
Welcome back, everyone. This is Not Your Advisor with NYU Grad on Monday, August 19th. Hope you all had a great weekend. Let's jump right into the session. Lots to cover today. Looking at breadth, we had 819 new highs on the NYSE versus only 87 new lows on the NYSE. So new highs are outpacing new lows 10x today. Looking at advanced decliners, we had 76% advancing versus 20% declining. 33% were below their 50-day and 33% were equally below their 200-day today. All sectors were green, so very bullish. The only knock I would have is it's on low volume, still across the board since last week's bounce started. I think I'm going to title today's episode Drinking the Kool-Aid, because what I've noticed is just in my social circle, everyone is texting me saying, stocks are ripping, jackpot, brr, noting the Federal Reserve and the printing press. Everyone's just happy. It's like drinking the Kool-Aid. It's like, the whole event of the yen carry trade never happened, and everyone has long forgotten about it. So I did want to just kind of continue on that theme. I am resharing in the show notes my July 21st writing of the Ponzi, why stocks only go up, and I link to some other sources like Michael Green from Adam Taggart and Thoughtful Money, as well as others like Bill Cara, why this happens and what type of state we are in right now. And I want to kind of pull back the picture or the painting so you could see the broader brushstrokes. So Exhibit A will be that post, why stocks only go up. You should take the time and read all through the content there. Exhibit B is the chart of Apple. And I'm just using Apple because pretty much everyone owns it, Apple, whether you like it or not, in some shape or fashion. So there was news recently that Warren Buffett, Berkshire Hathaway, sold half of their Apple stake. That selling started back in the fourth quarter of last year and accelerated into 2024. So if you take a look at the chart of Apple since July of last year till now, as you know, I trade auction market principles and balance areas. And if you had 80 billion worth of Apple to sell, how would you go about doing it? Would you put in a market order to sell your 80 billion dollars worth of Apple shares? Or are you going to do this in a controlled fashion where the majority of time and volume of traders agree to exchange money for shares of Apple? Of course, it's going to be in the widest balance area because you have a lot of shares to sell. And if you know, I drew this balance area before this news of Berkshire Hathaway selling Apple. And this balance area starts end of July of last year to May of this year. Just take a look at that chart. It's a wide balance area where buyers and sellers are all agreeing to sell and buy Apple between 165 and 195. So if you're holding on to that many shares of something, you need a liquid market. And that's when Warren Buffett sold. Do you think he's crying that it broke out of the balance area and now we're close to 220? Probably not, because he probably bought it much cheaper. So if this is a new bull market and the Fed is going to save us and Janet Yellen is going to save us, and this is truly a new bull market where valuations are cheap, why would he sell $80 billion worth of Apple? Comment below. You tell me. I think everyone is right now drinking the Kool-Aid, thinking that this time is not different, but we shall see. So I'm going to go over real quickly just some things that stuck out. General Motors is laying off 1,000 white-collar jobs, software engineers in Detroit. Half of them in Detroit, half of them internationally. But my question is, these are high-paying jobs. Where do they go now? They probably live in, the 500, 600 people in Detroit. Where do they go work? Are they going to go to Ford? Are they going to move to Dallas and try to get jobs at Tesla, but they had their own layoffs? Are they going to go to South Carolina in the southeast region and try to work for Hyundai, Toyota? You tell me. Or are they going to have to pick up new skills and find a new career? So that's some news I saw that was kind of saddening on this Monday. The volume is tepid. This is still a bounce. I need to see 2x average volume to even consider this as a new bull market base. Another curious thing, the yen was green overnight, and the Topex as well as the Nikkei was down almost 1.5 to 2% before the U.S. and European markets opened, and the U.S. dollar is red, which is not good. What was strong? TerraWolf up almost 8%, 7.94%. Affirm Holdings was up 6.6. Hims and Hers 6.2. Hut 5.8. Yext 5.8. Roku 5.7. Silvercorp 4.9. AMD 4.5. Nvidia 4.3. Instacart 4.3. Beazer Homes 4.2. Pan American Silver 3.7. Zillow Group 3.6. Lyft 3.5. Toll Brothers 3.3, Intel 3.3, Tesla 3.05, and Zoom conferencing 3.01. What was weak? DJT Partners down 3.5, natural gas futures down 2.7, USO, which is oil, down 2.5, crude oil futures 2.3, and Cura Sushi 2.1. That's really the summary of the day. It was a low volume melt up day. Let's see how many more days this can keep on. Jackson Hole, what to watch? Jackson Hole is Friday, 10 a.m. Eastern Time. Well, not Jackson Hole, but Jerome Powell. That's all that really matters. Again, we're all waiting on bated breath for this one man to talk. 10 a.m. Jerome Powell is speaking from Jackson Hole, Wyoming. Free members continue to watch the Mag 7. Continue to watch yields. Continue to watch the Japanese yen, U.S. dollar currency pair, as well as the Japanese market overnight, and watch for volume. There's no volume. It's just tepid. So with that, this is a short one. I will see the free members after Tuesday sessions. Premium members, please stay on. I have about 20 plus charts to walk through today with you. That's my train.
Stand clear of the closing doors, please.